All right, I post a lot of my videos to YouTube along with some other channels. And one of my videos, I talked about the 401k trap, and someone responded, this dude is lying. When you retire, you pay no taxes on your 401k. And I want to be very careful with sort of like people who don't know what they're talking about. So let's just be clear. We're going to go over to Investopedia, and we're going to take a look. And if you don't believe Investopedia, you should definitely go to irs.gov, and you can kind of see what's going on there. Sorry for all these pop-ups. All right, so our 401k withdrawal is considered income. Yes, both your contributions and gains count as income. However, you don't take that income until you take it out. So assuming you're 59 and a half, and you are able, and you take money out. If you take out before 59 and a half, you pay the 10% fee. You pay a 10% penalty. But assuming you are 59 and a half and you start taking money out of your 401k, you will, as it states here, they will be considered income. And it's just like ordinary income. It's like you got a paycheck, right? It is not considered capital gains. It is considered ordinary income. And so when you pull that money out, you're going to have that situation. You're going to be paying whatever taxes. So let's say you take out, and I think I've showed you my tax schedules before, which are published by the IRS, but it's assumed you take out, so, $50,000. That's $50,000. If that's all you took out for the year, that will be considered ordinary income. No different than if you went and worked at the Home Depot or did something else for that $50,000. You will certainly have that. I do want to highlight this other thing. At age 73, if you're an individual who was born between 1951 and 1959, you will have to take out a required minimum distribution. Or if you're age 75 and born after 1960 or 1960 or later, you are mandated to start taking required minimum distributions. And those distributions can be quite large. And again, I've shown you a number of times what those distributions are, but those will be considered ordinary income as well, right? And so, I think one of the message that we're trying to get to you is, you can certainly hang on to your 401k up until the end, but if you do hang on until age 73 or 75, depending on your age, you will be forced to take out money, and the amounts you have to take out are not going to be by your choice. They're going to be by a schedule that's dictated, right? And so I just want everyone to be aware of that and to be thinking about that. I won't get into all of this. I'm just trying to see if I think it's important to just understand that that income, it's generally subject to your income tax because contributions and gross were deferred. So what they're saying is you didn't pay taxes when it went in. You didn't pay taxes when you earned that money. So, you're going to end up paying taxes at the end. So, what this gentleman is saying, I don't know who he is, but he is not correct. And I hope that you believe what's Investopedia is saying. But again, if you don't, please go to irs.gov.